Welcome to the channel. Today we're tackling a money-saving topic, why many people spend around $500 on simple tax returns, and how you can stop. We'll walk through what qualifies as a simple return, the role of the standard deduction, common myths like the home office deduction for W-2 employees, moments when things get more complex, and a clear step-by-step plan to file confidently using modern tax software. Along the way, you'll see helpful diagrams, quick quizzes, and a practical checklist. Let's begin. Here's the plan for the video. First, we'll define what makes a tax return simple. Next, we'll compare the standard deduction with itemizing so you know which path likely fits you. Then, we'll address the home office myth and other pitfalls. After that, we'll explore situations that add complexity, such as real estate transactions and business income. We'll also provide a clear, step-by-step DIY filing plan, test your knowledge with short quizzes, and close with key takeaways and next steps. The core insight is that a large number of taxpayers have returns dominated by W-2 income and the standard deduction. When that's true, your return is generally simple and very manageable with mainstream software. You can save hundreds of dollars annually by doing it yourself because the software prompts walk you through the process using straightforward arithmetic and guided questions. If you aren't itemizing and don't have complex forms such as a Schedule C, rentals, or K-1s, you're probably in the DIY-friendly zone. Use this quick test to assess simplicity. If your primary income is from a W-2, you plan to take the standard deduction, and your investment income is minimal, you're likely a good candidate for DIY filing. Credits like the child tax credit or retirement-related credits are still compatible with a simple return. However, if you run a business, have rental properties, or receive K-1s, complexity increases. When in doubt, start with software and evaluate your comfort level. The flowchart shows that if you don't exceed the standard deduction, you typically take it, which keeps the return simpler. This table illustrates common scenarios. If your itemizable expenses, such as mortgage interest, property taxes, and charitable donations, don't exceed the standard deduction, you usually take the standard deduction. If they do exceed it, consider itemizing. If you aren't sure, most software will compare both methods and choose the better option for you. Here's a practical workflow. Begin early to reduce stress and avoid last-minute problems. Gather your forms, including any W-2s and relevant 1099s. Enter the W-2 exactly as it appears, paying close attention to the numbered boxes. Then, follow guided prompts to identify credits like the child tax credit or saver's credit. Use the software's comparison tool to confirm whether the standard deduction or itemizing is better. Run built-in error checks, review your summaries line by line, and save a full PDF copy of your return. Finally, e-file and store your confirmation and a secure backup. A common mistake is trying to claim a home office deduction as a W-2 employee. Under current federal rules, that deduction is typically not available for employees. Similarly, minor out-of-pocket job expenses usually don't affect the result meaningfully. Instead, focus on the standard deduction if you qualify, and explore whether your employer offers reimbursements for certain costs. Question: which situation most likely qualifies as a simple DIY return? Options: A. W-2 income, taking the standard deduction, tiny bank interest. B. Multiple rentals and a Schedule C business. C. Several K-1s and large itemized deductions. D. Complex crypto trades and foreign income. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is A. A W-2 only scenario with the standard deduction and small investment income is typically straightforward to handle with software. The other choices describe returns with substantially more complexity, where additional forms, schedules, or special rules may apply. This timeline emphasizes starting as soon as forms arrive, usually late January through early February. Next, you begin your software setup in early March, entering W-2 and any basic 1099 information. By mid-March, you run error checks and confirm whether the standard deduction or itemizing is best. In early April, you conduct a final review and plan any payment or confirm your refund. Before the filing deadline, you e-file and archive confirmations. Building this buffer reduces stress and gives time to address any unexpected questions. Real estate changes add forms and questions, but don't assume you must hire a professional. Software typically asks clear prompts about your purchase or sale. Keep your closing disclosure and any 1099-S forms available. For home sales, evaluate whether you qualify for the exclusion on gain from a primary residence. If at any point the process feels unclear or you doubt the results, you can pause and transition to a professional before the deadline. Here's a side-by-side comparison. DIY software generally costs much less and builds your understanding, while still offering comparisons and error checks. Paid preparers are valuable when time is limited or complexity is high, such as when you have business income, rental properties, K-1s, or intricate investment situations. Choose based on your return's complexity and your comfort level. This pie chart highlights that avoiding preparation fees delivers the largest share of savings. Filing earlier can also help you capture promotional pricing on software. Finally, reviewing your withholding or estimated payments now can prevent surprises next year, creating additional indirect savings. Question: as a W-2 employee, can you generally claim a federal home office deduction? Options: A. Yes, always. B. Only if you work from home sometimes. C. Typically no for federal purposes. D. Only if your employer signs a letter. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is C. Under current federal rules, W-2 employees generally cannot claim a home office deduction. There are exceptions in other contexts or jurisdictions, but for federal taxes, this deduction is typically unavailable to employees. These are the key takeaways. A W-2 return with the standard deduction and minimal investments is usually ideal for DIY filing. The home office deduction typically doesn't apply to W-2 employees. Start early and rely on software comparisons and error checks. You can always switch to a professional if you run into uncertainty. By following this approach, many taxpayers save several $100s every year. This content is educational and not individualized tax advice. Tax laws and thresholds change, so verify current IRS guidance and follow your software's latest prompts. Your situation may be unique. Consult a qualified tax professional if you have uncertainty or complex circumstances. To recap, determine if your return is simple by using the checklist. Prefer the standard deduction when your itemizable expenses don't exceed it. For W-2 employees, disregard the home office deduction myth. Start early. Follow the guided steps and use built-in checks. Finally, save your PDF and confirmations in a secure location. Thanks for watching. If you found this helpful, please like the video, share it with a friend who's still paying too much for a simple return, and subscribe for more actionable financial content. Tell us in the comments which part of the process you want deeper tutorials on: forms, credits, or real estate steps.